Hey everyone, welcome back to the channel. So in this video, I want to talk about 3 undervalued stocks to buy now in November 2021. These are 3 stocks that I think look undervalued compared to the rest of the market and should outperform over the next few years. I'm excited to share these stocks with you because I'm sure there's a couple that you haven't heard before. As always, I highly encourage you to watch the entire video to get my full thoughts on these stocks and why I think they will perform well over the coming years. So let's get started. Now, a quick note before we start the video, I am not a financial advisor and this is not financial advice. These are not recommendations, and you should always consult your own financial advisor before making investment decisions. All right, now back to the video. All right, so the first undervalued stock we're going to talk about is Overstock.com. Now, Overstock is a name that you may have heard of. They historically have operated as an online retailer. But in this video, I don't want to focus on the common stock of Overstock. Instead, I want to focus in on a special class of stock that Overstock has issued and why it is undervalued compared to the common stock of Overstock.com. Now, if you look at the fundamentals of Overstock, they have had a pretty good year over the past year. I mean, insanely high return on equity with no debt too, so that makes it even more impressive. Return on assets 33%, and earnings growth has just been off the charts. Obviously, with all the demand that's been happening, a company like Overstock is going to have a pretty good year. But like I said, instead of OSTK, which is the common stock, we're going to talk about a special class of shares that Overstock has recently offered to the public. And that is the Overstock.com preferred digital voting shares. The ticker for this is OSTKO. They trade on the over-the-counter markets. So first we're going to talk about what these preferred digital voting shares are, and then we're going to talk about why they are undervalued compared to the common stock of OSTK. So the reason that Overstock created this new class of shares was as a way to promote their new crypto blockchain platforms. So even though traditionally Overstock is an online retailer, they have been making investments into the cryptocurrency and blockchain space. And so one of these Overstock investments was into TWLO, which is sort of an online exchange for blockchain assets like NFTs or other sort of tradable items using blockchain. And so originally Overstock issued these digital shares over this platform TWLO as a way to incentivize users to sign up for the platform. And to incentivize people to do this, they made the digital shares of Overstock have special privileges that the common stock did not. So here's the news release talking about these digital preferred stock, which is OSTKO. And so here the company just describes the key attributes of this stock. And so the shares of the digital voting Series A1 preferred stock are preferred shares of Overstock.com, right? They have equivalent voting rights to the common shares of Overstock. They have an equivalent liquidation preference to the common shares of Overstock, and they have a preferential right to an annual cash dividend of 16 cents per share, which have been paid in each of the last 3 years. And they are required to trade on the TWLO platform. And so this is very important because according to this, these digital voting preferred shares are equal in all ways to the common stock, right? They have the same voting rights, they have the same liquidation preferences, but in addition to that, they also have an added benefit in that they're eligible to receive these special dividends that the common stock does not. Right? If we take a look at Overstock, they don't pay a dividend, and I don't believe they ever have in the past. However, these digital shares give holders the right to a dividend, right? And so because of all these factors, it is obvious that the digital shares are just better than the common shares, and so they should be trading at a premium. But instead what we're seeing is the opposite. These digital shares are actually trading at a pretty wide discount to the common shares of Overstock. So if we take a look at the common shares, Overstock is currently trading at $98, but if we take a look at OSTKO stock, it's currently only trading at $77. And remember, these two shares, they have equivalent voting rights, it's equal proportional ownership of the company, the same liquidation value, and the digital shares have the right to a dividend. And yet despite that, these digital shares are trading at around a 20% discount to the common shares of Overstock, right? When in reality, it should be the opposite. These digital preferred shares should actually be trading at a premium to the common shares of Overstock because of their extra benefits that the common shares do not have. And because of that, I think these preferred shares provide exceptional value. And there are a couple of different ways to play this. The first one would just be to buy these digital voting shares outright. You know, if you like Overstock as a company and you think the company will continue to improve, these voting shares are essentially just buying Overstock at a 20% discount to current prices. However, if you don't think that, if you think that Overstock is maybe overpriced right now, you could do some sort of a pair trade where you buy the digital voting shares and then you short the common shares of Overstock, and then you would profit that difference. Right now, the discount is around 20%. And so you would potentially make more than that if these shares ever did trade at a premium to the common shares of Overstock. And so this is actually something I'm thinking of doing. for some cash that I have lying around, this does seem like a pretty low risk way to take advantage of the sort of arbitrage between the two different classes of shares. Now, there are a few good reasons for this discount. One is just because the liquidity for these preferred shares are lower, right? The volume isn't nearly as high as the common shares of Overstock. I've seen online people have had trouble in other countries buying into this OSTKO stock. T0 platform currently only allows people from the US, and from what I've heard, overseas brokers don't have this stock on the over-the-counter markets. But I do think eventually that will sort itself out. Now, there is another risk, and we can go back to that, and that is that these digital shares are, according to the company, are required to trade on the T0 platform. They have said that they shouldn't be trading on over-the-counter. However, that is where the stock has been, and these preferred shares have been trading on the over-the-counter markets, for well over a year now, since May of 2020. And so it doesn't seem like the company is going to take any action to stop this. In the future they may. It's sort of hard to tell, but that is a risk to look out for. But as of now, any broker that allows you to trade over-the-counter stock should have OSTKO available to trade on their platform. And so that's why I think this is a pretty good opportunity. You have shares trading at a 20% discount that really shouldn't be. If anything, they should be trading at a premium. And this is also a situation that I haven't heard a lot of people talk about. And if this does gain more attention in the future, this discount will most likely start to close. Now, the second undervalued stock we're going to talk about in this video is Activision Blizzard. The ticker is ATVI. Activision Blizzard is one of the leaders in the video game space. We take a look at their About section. Their key franchises are things like Call of Duty, World of Warcraft, Diablo, Hearthstone, Overwatch, and Candy Crush. Right, obviously some pretty well-known video games. And the stock has been crushed over the past half year or so. The stock was trading at over $100 at the beginning of the year. Now they're trading at $66. And there have been a number of negative events within the company that have led to this drop. Right, and here is a good article I found talking about those issues. So back in late July, California's Department of Fair Employment sued Activision Blizzard over allegations of sexual harassment and discrimination against its female employees. This led to employee walkouts, a class action lawsuit, and management changes. And so obviously not a very good situation with the company, right? Obviously the leadership did not do their jobs to prevent this from happening. However, it seems like now the company is in the process of making changes, and assuming that they can, fix everything out and that this eventually blows over, the company does trade at a pretty compelling valuation, assuming these issues resolve themselves over time. And the most recent event that made the stock fall some more was a weak third quarter's earnings report with weak guidance for the fourth quarter. They announced that they would delay 2 of their games that are eagerly anticipated, and that one member of the company's new management is leaving after just 3 months of the job. Right, but I think these are all short-term events that should resolve themselves over time. Right, as a long-term investor, I don't really care if this quarter or the next quarter the results aren't going to be great. Right, what I do know is Activision Blizzard has some great franchises. They have a moat in that they own these video games that have a ton of fans that are always going to play them. And so that puts them in a very strong position moving forward from here. Now, why I do think this is a compelling valuation is because the stock has recently diverged from their main competitor. So their main competitor in the space is a company called Take-Two, which is also another video game company. We can look them up pretty fast. And just look at Activision Blizzard's valuation. They're currently trading at around 19 times earnings. Meanwhile, over the next 5 years, earnings are expected to grow at around 14% a year. So these numbers look attractive compared to the rest of the market. Now, if we take a look at their main competitor, Take-Two Interactive, right, we can see they're trading at a much higher valuation, 37 times earnings, even though the expected growth is around the same 13-14%. Now, what's interesting about these two companies is that investors keep an eye on both of them, and both of these companies, both Take-Two Interactive and Activision Blizzard, tend to trade very closely to each other. And we can take a look at that using this correlation, using the stock correlation calculator I found from buyupside.com. I'll put a link to this in the description if you want to check it out. But basically, you can enter two stocks and see how closely they track each other over time. And these two companies have a correlation coefficient of 0.95. So for anyone that knows statistics, that is, right, these two stocks are extremely correlated. They move extremely close with each other. You can see that from looking at the long-term stock chart. The two companies closely mirror each other, mainly because of how similar they are. But the thing to note is that in the past few months, there has been a major divergence between the two companies. We can see Activision Blizzard stock has continued to fall. Meanwhile, Take-Two fell for a little bit and then has now rebounded back up. So there now is a pretty wide spread between Activision Blizzard, and Take-Two. Again, probably for those reasons that we talked about. However, I do feel pretty strongly that those issues will resolve themselves over the next few months, maybe a year. And after that, Activision Blizzard should rebound nicely to continue tracking the movement with Take-Two. Now, the last undervalued stock we're going to talk about is a company called TWLO. Their ticker is TWLO. And this is one that a lot of people have been talking about after the stock has fallen by a pretty good amount over the past month. Right back at the beginning of this month, they did have a weak earnings report, which sent the shares down by a good amount. For anyone that doesn't know what TWLO is, they are a software company that provides software for communications, mainly things like phone calls and messages within a company's platform. And so they have been adopted widely over the past year. This is one of the pandemic winners. Right, if we take a look at the long-term chart, one of those stocks that have benefited greatly from the new work environment that we've been in. And so they had extreme growth last year, but that growth is starting to cool. And of course, when that happens, a lot of investors get scared and sell out of their shares when the growth projections start to slow down. So if we take a look at the earnings results, third quarter revenue did grow 65%. So the company is still obviously growing sales very fast, right? But now they're expecting an operating loss of 40 to 45 million in this quarter. And so because of that, investors are starting to dump the stock, right? As they think that the growth is starting to slow and they will continue losing money. There are some analysts that are still bullish on TWLO. Analyst estimates aren't something that I place a huge weighting on when I look at a stock, but it is interesting to see what they have to think, right? They say the stock's decline is due to a 12-point deceleration in organic revenue growth. However, they're still bullish on the 2022 potential results with, they think, ability to drive organic growth back towards 30%. And so this is definitely one to look at. They're losing money. Next year they're expected to lose 4 cents per share, so just about breaking even next year, right? And the sales growth has been extreme, 30, 40, 50% a year. And so if that continues, TWLO should continue to perform well. This probably isn't a company that I will invest in. Money-losing companies that have high growth that is expected to slow over time isn't really something that I look for. But if you are interested in the technology software space, this is definitely a company to look at. All right, so that is my list of 3 undervalued stocks to buy in November 2021. Again, these are names that I'll be keeping an eye on, and I'll let you know if I ever enter into a position on any of them. Let me know what you think about these ideas and if you'll be looking into them further. As always, if you found value from this video, be sure to share it with others who would benefit from watching it as well. Also, if you appreciate these videos where I try to bring you unique stock market ideas, hit the like button to help the YouTube algorithm push this out to more viewers, and subscribe to the channel if you haven't already. All right, so that's it for now, and I'll see you on the next video.